Hi, I'm Nancy Klahold. I'm a financial advisor with Fulton Private Bank, and I've been asked to talk a little bit about qualified charitable distributions by the York County Community Foundation. I've been involved with the foundation for many years in various volunteer capacities. I've been on the investment committee, I'm on the resource development committee currently, and I also am very proud to have been nominated for the Professional Advisor Recognition Society. So it's an organization that I've been involved with for a long time. So I'm delighted to talk to you today a little bit about qualified charitable distributions. Let's first define a qualified charitable distribution, or more commonly referred to as a QCD. What it is a distribution from an individual retirement account owned by an eligible individual that are paid directly from the IRA to the qualified charity. The qualified charitable distribution is not includable as taxable income in the year of distribution. Qualified charitable distributions have been around for nearly 10 years. So let's review the legislative history on this technique. The Pension Protection Act of 2006 enacted QCDs for the first time to allow individuals 70 and a half or older to make tax-free donations to qualified charities from their IRA assets. Technically, taxpayers were allowed to exclude from gross income otherwise taxable distributions from their IRA up to $100,000 that were paid directly to qualified charities. Now, the law was originally scheduled to expire in 2007, but was extended periodically through 2014 by Congress. Great news, in 2015, Congress made the legislation permanent so that periodic renewals were no longer required. There were some changes in the Secure Act of 2.0 in 2022, which indexed the annual distribution limits for inflation and expanded the eligible charitable recipients of QCDs to include split interest charitable entities with a one-time election up to $50,000. Now, one thing to keep in mind, there are certain age eligibility requirements for the qualified charitable distribution. Individuals must be 70 and a half or older to be eligible to make a QCD gift to charity. The other thing is QCDs may be only made from traditional or Roth IRAs. They may not be made from a 401k. The other thing to keep in mind is the limits on the QCDs. Originally, Congress allowed up to $100,000, but has now adjusted this for inflation by the Secure Act 2.0, and the current limit for 2024 is $105,000. So another feature of the qualified charitable distribution to keep in mind is that it must be a direct transfer from the IRA custodian to the qualified charity. The IRA should not be distributed to the IRA owner and then gifted to the charity. It goes directly from the IRA custodian to the charity. QCDs must be paid to a qualified charity. Donor-advised funds, private foundations, or supporting organizations would not qualify for a QCD gift. The Secure Act 2.0 in 2022 made it permissible to make a one-time QCD gift to split interest entities such as charitable annuity trust, charitable unit trust, or gift annuities. There is a limit on this type of a gift, originally $50,000, and in 2024 it's been indexed for inflation to $53,000, so that should be kept in mind. I would mention that the York County Community Foundation is a qualified charity for purposes of a QCD gift. The real feature of a QCD gift to charity is that the amount of the distribution is not included in taxable income, as would ordinarily be the case with an IRA distribution. This can benefit many taxpayers because it lowers their adjusted gross income. It can possibly reduce taxation on Social Security, and it will minimize the impact of certain phase-out provisions, which can reduce your deductions or credits. This is something that should really be discussed with your own tax advisor. Many individuals appreciate the opportunity to make gifts to charity in a tax-efficient manner, but one of the things to keep in mind with the QCD is that you can't double dip. You can't get the benefit of the QCD, reducing your taxable income, and at the same time take an itemized deduction for that same charitable gift. You should really consult with your tax advisor and make sure that they're aware of how you're doing your charitable giving, either through a QCD from your IRA or whether you're making a direct gift to charity. Individuals who don't itemize on their income tax would really benefit from a QCD because then they can reduce their taxable income by the amount of the distribution to charity from their IRA. Another feature of the QCD is that the distribution to charity from your IRA account is eligible to be counted as part of your required minimum distribution. Individuals are required to start taking distributions from their IRA at age 73, and at that time they can also consider diverting some of that required minimum distribution directly to charity via a QCD. Now please remember that QCDs are allowed to begin at age 70 and a half, which is somewhat before your required minimum distribution date, but it's something that you should still consider beginning at age 70 and a half. Lastly, I want to emphasize that QCDs are a federal income tax benefit. There may be state benefits as well, but they might vary from state to state. You should consult your own tax advisor to determine if there are any state tax benefits for you. I hope this information has been helpful and has piqued your interest about how a QCD might fit into your charitable giving plans. If you'd be interested in considering a qualified charitable distribution, please keep in mind that the York County Community Foundation is an eligible charity for purposes of a QCD. If you'd like to learn more, please contact the development team at the York County Community Foundation. Thank you.